Hi. I'm Hannah. I am the CEO of North Creative Inc. We're an advertising agency in Yellowknife, Northwest Territories. And I'm so excited to do this with you, Darren. This webinar that we've been planning for a while, the business performance checkup. This has been sort of 2 months in the making, I think, has it not?
Yeah, no, it's fantastic. Really excited to be here today.
We're going to cover all kinds of things that sort of are married together. I feel like a lot of people wouldn't necessarily know that marketing and your finances and business planning in general are very sort of interconnected. And so, what Darren and are presenting to you folks today is sort of what I would call like the sister and brother of each other. And a lot of people will take a look at their finances and their business strategy and sort of panic, or they'll take a look at their marketing and not feel like they're educated enough. And so, really, what the goal of this webinar is that Darren and I are sort of going to walk you through what it looks like to take a bird's eye view and sort of do that checkup of your business without fear, really. And so we're going to start off with some marketing techniques. We're going to specifically talk about marketing to your ideal client, and then Darren is going to talk about sort of more the high level version of that and get into the nitty gritty of how that actually looks like and how to prepare your business planning for some of the topics that I'm going to talk about. So I'm excited. Should we dive in?
Yeah, let's go.
Let's do it. Okay. I think a lot, if we're going to talk about sort of marketing to your ideal client and why it's really important, for me and for a lot of the clients that I work with, there is this disconnect when it comes to sales. There's two issues. Number one, we're making some money, but we're not making money in the right way, or we're not talking to the right people that we want to engage with. And the second is no one knows we exist, and we keep throwing money at Google ads and Facebook ads, and we're not seeing any data and results. And so I always tell people you want to come back to the original sort of founding of your company or your nonprofit, and if you're a nonprofit, start with the why. Most people will sort of say, well, money is the reason why we started this. Well, not necessarily. Money's the result, profit's the result, but really, what is the purpose, belief, and drive? For me, I ask myself the question, why do I get out of bed and go to work every morning? And so for a lot of companies, it looks like to share art, to share their services, to help people. If you're a therapist, you likely started your company to help people feel better about their lives. And so once we come back to our why, we're able to share that with the ideal client and find our ideal client. A lot of people are very good at doing the who. So, we're North Creative, we're an advertising agency in Yellowknife. The how, we help local businesses and nonprofits market their companies. The why is a tricky one because why is very personal. But when you start to market from your why, your ideal client will find you. Because when you're hiding your why, people will look at your competition and make a financial purchase, not an emotional one. And so, what we want to do with marketing is use that why, that emotional center of people's decision making, for them to take the plunge and work with you. So that's the first thing. I would encourage you to start thinking about your why and writing it down, and also looking at your competition. A lot of people will panic when we get into pitfalls in business. We're not making any money. Our competition is doing better than us. My argument is always, are they doing better? Or are they very good at marketing to their ideal client? So I want you to start with reviewing how your competitors market their work and looking for how you can fit in. For example, do they offer a complimentary service that you offer one that they don't? Are they very good at showcasing local flair? I think a lot of people will hide their teams. It's important to show your team and to show that you are local, especially now with social media changing so much and marketing changing so drastically into this digital world. People will make choices and purchases based on whether or not you live within their vicinity. So if you are in Yellowknife, if you are in Edmonton, show us that you are. Showcase that local flair. And the other thing is, don't always assume that clients aren't paying attention. Just because you have low engagement on social media doesn't mean you're not getting a lot of views. And so in these next slides, I'm going to talk about how to actually track that data. But for now, look at who is in your field. Who else is offering the services that you offer? Learn from watching them. What do you like about what they do? What do you not like? And how can you be different? Where is the gap? Understanding what your competition is currently offering will help you fill that. For example, if we're going to use this example of a therapist's office, let's say one therapist is struggling and their competition offers complimentary tea and coffee. And that's something that people have raved about in the reviews. So we know that that's what the local demographic and the local market really like. So we can learn from our competition and morph it into something that we want to achieve ourselves. We can also learn from listening to people who come to our business and have previously tried our competition, right? They didn't offer me a lot of price points that I really liked. Okay, well, now I know I can offer you 6 price points and you can pick from them based on your budget. So understanding that's really important. Next, we're going to dive into finding your ideal client. When we market to everyone, we market to no one. I want that to be pretty clear. I think a lot of people think let's just throw money at it, see if it works. When we do that, when we cast a really wide net, we are not attracting people who are naturally going to spend money on our services. So my advice is start with the data that you currently have. So look at your sales. Look at who is currently buying from you right now. If you have social media, it will actually track for you their gender if they're listing it. It will track their location and also their likes and dislikes. If you look at your sales and you see that a lot of businesses are buying from you, well, you know that's the work style. Okay, so our business already does a very good job of attracting other businesses. I want you to look at who follows you on social media, and there's two ways you can look at that. The first is you can go onto your posts and see who is viewing and who is engaging. Those are two different things. Engagement is who is liking it, actively sharing it, and commenting on it. Those who are looking at it are still engaging in some way, but they haven't made the decision to either purchase from you or engage by liking or commenting. Those are sort of like the watchers in the background, right? We want to make sure that those people are our ideal clients. So we start with that, make that list. And come back to some emails, come back to some reviews. What do clients typically say that they love about your service? We know at North Creative, people love how friendly we are and how sort of honest and human we are in our responses. And they like that we give them data. So that's one of our strengths. We have that, we know that exists. So when you're doing your planning, take your piece of paper, write down the data that you already have. So I know that, say, businesses are buying from me. I know that they are mostly, let's say, female-driven businesses. I know that they are local, and this is their average spend. Look at how much money you are making with those businesses, okay? They're spending up to $6,000 at a time. Writing down those key data points is going to be really important. I also want you to take in the other side of the page the most popular selling months and the downtime for the business. This will tell you when you need to be marketing and how to prepare for it. Darren's going to talk about that in his slides coming up about how to prepare for growth. And right now, having all of this data will tell you how to prepare. There is no point in spending money in a month that you are already incredibly stressed and your team is stressed. So look for those downtimes. Downtime is an opportunity to start to market your business. So now we have that data. Let's start asking ourselves who our dream client is, who our ideal client is. And these are some questions to ask yourself, which brings you back to your why, right? What type of person would resonate most with this particular product and service? And also, where do they live? This comes back to expansion. Do you want to be marketing to a certain area of your town? Do they have a family? Are they making choices based on that lifestyle? Spelling error there, my apologies. Why is this person the best fit for your service? And what spending habits do they have? I want you to think about not just their spending within your company. Where are they spending day to day? And I'll get into another slide. This will help you figure out where to market your business. This one's really important. What kind of media do they consume? I'm not talking just about going to the movies. I'm talking about that social media engagement as well. When you look at who is viewing your profile, you can also see what other profiles they've liked. Do they follow other massive businesses in town? Do they follow your competition? And are they actively engaging with them? And are they how is your business helping them reach their goals? If you, again, a therapist's office and you specialize in couples therapy, that is how you would engage with people. We help you secure a happy family life, for example. So all of these questions are really important to get back to that original, that ideal client. Again, a wide net. If you are marketing to everyone, you are marketing to no one. Find your ideal client. They are out there. They are looking for you. We have to market to them directly in order for them to make that emotional decision to come to you. How do we speak to them? So now you have your ideal client. Let's say, for example, they're family folks. They spend a lot of money, on vacations. We know that if they're looking at social media, they're following, let's say, other like restaurants or local businesses. Maybe they are a member of the Chamber of Commerce. Okay, so we know that that's our ideal client. Now we have to be able to speak to them. There are two ways to talk to your client, and this should be in all the messaging that you produce, all the content that you produce, not just in posters, but on your website, in your rack cards, in your social media. There's something called value proposition and call to action. I want to talk about value proposition for a second. It is the statement that communicates what you offer and who you offer it to and how you do it. It also offers the value that you provide. So think of it as like almost like a distilled message. Some people call it a tagline. It can be very small, but this is the value that you offer that is different than your competition. A call to action is different. A call to action is the way that you want your clients to interact after they've read the messaging. For a lot of people, we post on social media or we produce a flyer or a poster, and then we expect people to just make the decision to come to us. Now, I think with all this digital kind of muck, people are making decisions in about 5 to 7 seconds, and they'll need a really clear path to engage with you. A QR code, a link on your social media, and there needs to be directive. Human beings like instruction. So you can say, here's what we do, here's how we do it, here's how our company changes your life. But unless you have that call to action, they'll like it and think it's great, but they will not make the choice and the decision to come to you. So always make sure you're putting some kind of specific directive on your marketing. And that's really how you're talking to your ideal client again. Now that we've figured out who the ideal client is, we've figured out what the value proposition is, what's that key statement, and we've figured out what we want them to do. So go online to book a therapy session, for example. I want you to place your marketing in areas where your client will be looking. For example, if you are marketing to local businesses, then start to market in areas where businesses are looking. The Chamber of Commerce is a prime example. That's what we did for this webinar. We posted an e-blast. We put posters up. We went to the trade show, right? We're engaging with the people that we actually want to be in this webinar. If you're marketing to parents, for example, put something up in a high traffic area. I think there's a misconception that marketing will just sort of work magically. It works strategically. You need to be able to place your marketing in areas where you absolutely know you'll be able to get data back. For example, if you are placing, advertising in a restaurant, where people are waiting in line and looking at a poster, great. But who are those people? Are they families? Are they couples? If you are a wedding photographer, you might want to start to market in places where couples are naturally heading to, spas, restaurants, date night, things like that. It doesn't have to be expensive or taxing. But I think the question begs itself, how much is this problem costing me? I think a lot of people will throw money at the problem and then expect some magical results rather than taking the time to strategically think about where your client is looking, making a plan, and executing the plan well. And Darren's going to get into what the physical costs of that are in terms of client acquisition costs. But specifically, what is the cost of you ignoring it? We look at our books and go, what happened? How did we have these dip months? Well, do those dip months relate to you not engaging with your ideal client? So again, ask yourself that question: where do I need to place my marketing? And this slide here shows the different types of marketing. I'm going to quickly cover it before we move on to Darren's section here. So now that we know the client. We know that they're, for example, a family person. We know we want them to go online to book a service. And so for us, in this scenario, this example, it makes the most sense to do social media marketing because we are able to tailor the content, tailor the caption, and we're able to add a link that someone can go online and book. So social media marketing is either your single buyers or businesses, and you can track that engagement. You're able to actually see how the customer was reached. Posters and flyers would also work as long as the content is tailored to the audience and as long as you're posting it in an area where your client will be. So if you're engaging with families, I would advise not to put your posters up at a local business where there won't be a lot of families. Put them up at a restaurant. Trade shows and networking, that's a huge one. That's a single audience type. So just knowing that you're going to talk to this one audience type is really, really important. A lot of small businesses will also sort of throw, sponsorships or donations to charity, thinking that it will help. It will if there is, again, that data that you're able to track. Can I have my logo on this charity event? Can I have my website on the charity event? How is your money, your hard-earned money, being spent wisely with this person that you're sponsoring? Do they align with my values? And will this event attract the people that I'm trying to bring in as my ideal client? Do not underestimate word of mouth. It's direct marketing. You are able to actually repost those reviews. Those reviews on Google will actually allow you to get higher in your SEO and your search engine optimization. So be asking your client to give you some feedback. What needed to change about the service? What did you love? And find your ideal client to give you a review. Because if they loved it, what are the areas that they loved that you can start to market to more people like them? And then there's coupons and sales. Darren's going to talk about it more and how that actually works quite well and how to manage the data there. But this is direct marketing to clients that have either already been aware of you or are now making the choice to purchase or repurchase. Come back again and get 20% off. Right, you're retaining that client, and that's really important as well. So this chart here is to be used in relation to the person that you know you want to market to, and that's really what I want to focus on, in this section here. And then the next part here in this next slide, did it actually work? Before you start any marketing, start with the metric in mind. Is your goal to have higher bookings? Is your goal to have more followers on social media? Is your goal to have some more reviews to get your Google metrics up, and your website metrics up? Start at the end. How do I want my ideal client to engage with me? And that way, when you're actually at the end of your marketing strategy, you'll be able to see, did it work? And Darren will get into more about how those costs will look in terms of data, but this is specifically for how your marketing spend worked. How do you know it was successful? Please don't throw money at it. Please find a way to clock whether or not it worked. For us at North Creative, we had a very specific goal. We wanted to achieve more followers on social media. So that meant posting on social media in ways that would attract our clients. And that was achieved last year through tracking that data. So take a step back. Don't panic when it comes to your marketing. We're not throwing money at things willy-nilly. We're actually just taking a look what we need to do and speaking to our ideal client and being strategic about it. So using those techniques, take a step back, look bird's eye view, and make a plan before you spend. Thanks for listening.
Oh, that was fantastic, Hannah. Thanks. I mean, that was really good stuff, and it's great to hear that. We were talking as we were building this presentation. It's kind of a left brain, right brain uh, analysis, and it's just great to hear the other side of the brain talking. So, thank you. All right. Well, I'm gonna, one of the questions that we often ask ourselves is, or we'll ask somebody is, why are you a business, right? And this may be kind of a funny way to start, but we're not doing this to just keep busy. Now, I'm typically focused on for-profit organizations, and the messaging is really the same on for-profit. But for a small business owner or entrepreneur, it's to make a profit. Unless some people are in business because they're unemployable, and that's the only way to keep themselves busy. But we would hope that you're there with the focus of trying to make a profit and a surplus. And if it is a non-for-profit, your objective is to be really, really efficient with your expenses so that you have funds to provide the important services that your organization's providing. Um, so maybe we'll just roll in and just talk about some of the types of expenses that we have when um, when we're running a business, right? So um, we're when you're running an organization, you are constantly struggling with, what do I need to spend money on? What can I spend money on? Right. So, some of our expenses are not by choice. They're necessary evils. They're sort of the table stakes or the baseline that we need to incur in order to run our business. So we've got, delivery of product or services. We need to buy stuff. We need materials. We need tools in order to do what we're going to do to deliver a product or service. We've got administrative standards. So that's things like legal costs, bookkeeping, accounting, tax filing, making sure that the bank's happy if the bank's involved. We got lots of regular operating expenses. It might mean rent, might mean a telephone, right? A website, utilities, and things like that. Then we got some risk reduction expenses, and that's things like insurance, security, which could be physical security, could be cybersecurity. Are we backing up our computers? I mean, interest enough, this risk reduction area probably becomes one of the more discretionary areas for businesses because it's sort of hidden in the background. It's like, do I really need to spend that money on that? And it all depends on your risk profile. What are you willing to give up if you lose those things? And then we might spend money to actually reduce expenses, right? So this would be areas like focusing in on automation, business process improvement to make ourselves more efficient, right? And then last on the list, which is really what leads into everything that Hannah was talking about, is how do we, increase sales or foot traffic or activity within our organization. And this one, again, sort of can fall within that discretionary area. Although, Hannah may look at it very differently, and I do too to some degree. But it's one of these where it's like, oh boy, how much can I afford to put into this? What should I be spending? Where should I be spending it? How do I know if I'm making a good decision here? So let's talk a little bit about, how to evaluate an expense, right? So I think this is just a great statement and one to keep in mind is, is it necessary? Is it beneficial? And does it align with the objectives of the business? So what's the cost of doing nothing, right? So I talked about risk management. It's uh, the cost of doing nothing might be nothing, but it might be significant if there was an event that we weren't protected from, right? What's the cost of doing nothing in the marketing area? It might be that you just don't have people contacting you for your products or services, right? Um, so let's now roll on to the area that accounts love, which is the numbers. Well, I want to talk a little bit about client acquisition costs or customer acquisition costs. Um, so there's a number of expenses that go into putting yourself out there. So Hannah talked a little bit about sort of brand awareness and expressing your why, right? And a lot of these things go into that. So we have some general advertising. We might have a website. We're doing some work with SEO work. We might be spending time with social media campaigns. We're sponsoring different things. We may have a CRM system that we're using to track our activity. These are all important costs. We may have salaries, right? We may have somebody who we're employing on a full-time or part-time basis to help us strictly with sales, with marketing, business development, right? So we want to track all those costs and understanding what they are because it's not just the one, it's the entire spend. So when we have, in this example, we spend $7,000 over the year and we go back and we look and say, we got 20 new customers over that year. That client acquisition cost is $350 per customer. Now, that could be really good if our product or service is providing enough revenue and gross margin and profit to make up for that, right? So as an accounting practice, as you can imagine, that would be a very good number for me because I might be billing $4,000 or $5,000 a year to that customer. If I was running a deli and selling a sandwich and a coffee, and it cost me $350 to attract that customer, that might not be a great return for me, depending on how frequently that customer comes back. But we'll get into that in a little bit of a later slide. So now Hannah has talked a bit about, different places that we can be having our advertising dollars, right? And it's equally important to understand and measure as you're running these campaigns, what is my return on each one of these? And at the end of the day, it requires a fair bit of work because I mean it's relatively easy to know where you spent the money. It's can be quite tricky to actually understand where that customer came from, right? So you have to ask the question. Now, if it's a coupon that is distributed somehow and somebody brings it in, well, then it's really clear that that's where they came from. Uh, in our business, we're always asking, how did you hear about us? How did you find us? And in some cases, it's just like, hey, I was on Google and I asked, or maybe it was I talked to somebody at the trade show, right? Or I sat through a webinar that one of these webinars you provided. In many cases, it's somebody that I trust told me that you're great and that I should talk to you. And in our world, that trust often comes from existing, customers, and it comes from other trusted advisors like lawyers, bankers, things like that. So by measuring that, we all of a sudden understand where are these people coming from. So when we look at the numbers on the screen here, and these are just for example purposes, if I spent $2,000 on Google ads and eight people told me that they came to me because they saw, Google ad, and I know my client acquisition cost for that particular campaign was $250. And I'm not going to read through all of these because you can do that on your own. But if I'm sort of thinking that well, SEO and my blog posts on my website is the best place for me to spend my time, but I look at it, my client acquisition cost is $1,500. That may be not the best money that I'm spending, right? So with this information, then you can decide um, you know, where you're reaching those people. Because Hannah talked about that. She's like, put your effort where people are going to see it, where they're going to be, right? And it's the flyer at the arena if you're trying to sell, skating skills, right? Skating skills program. You're going to put a flyer up at the arena. That's going to be your best, but you can you have to be able to measure that. All right, let's jump on to the next slide. So then I alluded to it earlier. I said, well, $350 to acquire a customer, it really depends on how often that customer is going to come back, right? So we like to look at customer lifetime value, right? So is the person coming through the door or coming into your business a one and done? They're going to buy it one time and then you're never going to see them again, or is there a good chance that they're going to be recurring? They're going to come back, and there's so much that goes into that. It's obviously your type of product, your type of service, but it's also their experience. How was that? How much value did they receive when they came back through? So let's in this example, we say, okay, well, that person on an annual basis is going to be spending $5,000 with uh, with my business, my organization. And in that, I know that I've got some cost to deliver that service or that product, and that's 40%. So my gross margin is 60. That's my profit from each and every transaction that's left over to cover all the other expenses we talked about, my rents and my insurance and my, professional fees and those types of things. So in this case, the annual gross profit from that customer is $3,000. And I believe, or I kind of know based on history, that people stick around for, 3 years at least, right? So therefore, my lifetime value of that customer is $9,000. So how much am I willing to spend in order to get that kind of a return, right? So if my acquisition cost was $1,500, that's probably okay because I've given up about half of my first year profit in order to uh, get that person to come back in the next years, and that's when I'm gonna actually make some decent money off them. If my client acquisition cost was $3,000, it still kind of works, but I've now worked that first year for free, right? Everything that I earned off of them, was gone to provide the relationship to get them in the door in the first place. So, am I willing to do that? Well, maybe if I was guaranteed that they were coming back for 2 more years, but there's a risk that they won't, right? So, if you can imagine, everybody came and only stayed for a year, well, you're going to be quickly out of business because your cost to acquire those clients, sort of far exceeded, what you're going to get out of them. Does that make sense? Uh, all right, so this is funny. So Hannah was mentioned earlier. She says you're talking about coupons and a success story. Is actually kind of, this one was an interesting one because it went the other way, right? So this is why it's really important to measure um, who's coming and where they're coming from and why. So I was working with a client and he had a quick change oil business. So you drive up to the door, it opens up, you drive in, you get your oil changed. 2 minutes later, you're gone. And he ended up opening up a second location, which wasn't all that far from the first location. And he mailed out a bunch of coupons that said, hey, 25% off your next oil change. And so the oil change averaged about $80. So, $50 gross margin. So he was going to make $40 per oil change. So he sent out these 100 coupons. Now, interesting enough, by measuring who was coming back, and he knows because that car or that person is in his computer system, right? So, and 80 of came back, but they were from existing customers or people that were in his system already. 20%, fortunately, were new customers. Now, from the 80, he he ended up losing profit because they would have gone to his old location and they wouldn't have used the coupon, right? So they came over to this one, and so sure he got their business, but he gave up their business at the other location. 20 new customers came in, and that was great. So he made up a little bit because he had $400 for the gross profit, but he lost $1,600 based on the fact that his existing customers just drove a few blocks to get a cheaper oil change. So in this case, the campaign you could argue was a failure. All he ended up doing was, helping out his existing customers that would have happily paid him their full price at the other example. So these new clients need to come back on average 2.25 times so a little over two times each, in order for him to make up the lost gross profit from those existing clients that use that coupon. It's a tricky one, right? So when you're doing that, because you don't know what the result is. But after he did it, he did the analysis. He said, "Well, I won't be doing that again." Right. So take that one and give it a little bit of consideration. All right. So how do we decide, with expenses and marketing, like do I want to spend the money? Where do I want to spend the money? Hannah talked about some of this stuff, just sort of reiterate it from a finance perspective, but what types of clients are we trying to acquire, right? Where are they, uh, how many new clients do we want to get, right? And how many do we expect? And how can we handle that, right? Do we have the ability? Hannah talked about cycles in the business, and we don't want to be marketing at a time to a time when everybody's busy. But are we set up to do that? Um, what will that activity cost? Right. So this really gets into the I guess the campaign, right? Like what's it actually going to cost me to deliver this? And what is the expected client acquisition cost? Like think about that ahead of time. So it's like, okay, I'm going to spend $4,000 on this campaign. What do I want to get out of it? And Hannah talked about that. It's like, okay, well, if I'm going to get, 400 new clients, well, then my client acquisition cost is $10. Does that meet my needs? Is that great? Is that good or bad? It all depends on your circumstances. And from that, what do I actually expect from profit from each one of those clients, right? If the campaign is to, bring them in for a very low cost, low margin product or service, and that's all that they experience in their lifetime as a customer, then that's going to be a very different story. And if this campaign brings them in, but there's an opportunity to upsell them into higher volume products or higher margin products as well. All right. And then just to, kind of, wrap up, we always want to talk about, what does it mean to be to be successful? We've seen people launch campaigns that are extremely successful. However, the business wasn't prepared for that type of volume of customers, that volume of activity, and that preparation, sort of that planning, fall into a bunch of different areas. So one is like, do I have adequate inventory? Do I have the supplies to deliver? So we launched this campaign. Everybody shows up. There's lineups out the door, and we run out, and we have to send everybody home disappointed because everybody wanted mint chocolate chip ice cream. That was the promotion, but we didn't have enough, and everybody had to go, or they had to choose something else, and they're disappointed with that. Do we have the adequate staff in order to actually execute? Because we want to have this to be a positive experience. We know what the cost was to acquire that client, but from the client, the lifetime value of that customer, we need them to come back again, right? So was this a good experience? Are we able to, provide a good standard of service that, people would expect from us? Um, do we have bottlenecks in the system? Can we handle this? Like if I to onboard a customer, if it's a retail environment, there's probably not a lot of onboarding required. It's just, come in, we'll provide our product or service, pay with your credit card, and away you go. But in other relationships, there can be some fairly significant onboarding. Like, do we have the capacity to handle all these people? Um, as far as delivering the service, can we do that in a consistent manner, in an efficient manner to meet their expectations? And then, the payment terms, right? So this can be a really a really interesting one. Again, if it's, sort of pay as you go, cash on sale, credit card, that's fantastic. But a lot of businesses operate on terms. So, maybe I'm going to get paid in 30 days, maybe 60 days, maybe 90 days. In the business to business market, that's much more common than it is in the, business to consumer market. I'm working with a client right now who's, very excited because they're in a bid, their opportunity to bid on a contract. It's actually a government contract, and we're talking $750,000 a month in revenue, and they're just excited. Like these numbers are astronomical compared to what the business has done in the past. The problem is they need to pay people to do this work. It's a service business, right? And they're going to need to pay them, at the end of the month, in the middle of the month and at the end of the month, and then middle of the month and the end of the month and the middle of the month and the end of the month for 3 months before they're going to see any cash coming in the door. So, if their profit margin ends up being around, 50%, that's going to be $375,000 worth of payroll expenses they're going to have for each and every of those 3 months until they see the first check coming in from the government. And they can't do that. They're almost kind of barely meeting their needs, their cash flow needs on a day-to-day basis. So we're working with them and we're modeling that out. And we're going to be, there's certainly opportunities. There's banks that are interested to help finance. I mean, there's organizations that want to help you succeed, but you need to do it with a plan. And in the absence of that plan, some unfortunate things can really happen. So that basically wraps up my portion of the presentation. We always like to, say, wouldn't you like to know the financial results of a decision before you make the decision? And that all comes into the planning. And we'd be more than happy to help anybody out with that. So Hannah, I'll turn it back.
That was awesome. Darren, I literally wrote down, I'm not even joking, I wrote down like I need to add a how did you hear about us to our to our website forms. I think what you had said about knowing where people are coming from, and knowing the cost of acquiring a customer and especially of that like lifetime value, is so, so, so important. I loved that slide in particular, about the average client life, right? Like how long are they actually staying with us and how much is that costing? So that was for me, great.
Fantastic. Oh, great.
Um, yeah, thank you so much for sharing that with us.